Hello everybody and welcome back. In today's video, we discuss everything to do with the stock, commodity and crypto markets right now, including the key levels that you need to be watching in the charts. We've just had the inflation data come out for the US and it wasn't pretty. Massive spike across the board in inflation, and it was going all the way through to the roof. Now, this isn't expected to stop anytime soon, so let's take a look today at some of the performance sectors that will continue to do well in this market and some that may not. Stay tuned as we cover everything to do with the markets. See you soon. So welcome back to the market close show here for the 10th of March 2022. And as we said it before, inflation rate climbed heavily, 7.9%. And it isn't really set to drop anytime soon. Inflation has now surged to the highest rate since 1982. And we had people like Michael Burry coming out and saying it's 1977 all again. Of course, stagflation and other problems in the economy. Let's take a look at how the market reacted to it. So this is the broad market, the S&P 500 large companies. It was a bit all over the place. It came in selling off. So the market did actually hold that level, but we ended up having Amazon up thanks to a stock split. Apple, uncharacteristically massive sell-off there. Very defensive sector recently. People must have been starting to place bets. I've always suspected Apple was a little bit expensive still. And then we had energy over here, a very, very high. That was one of the big movers for the day. Let's take a look at the markets and how they moved. As we mentioned, the market came in, it sold off through part of the session and actually recovered okay. So it was down as much as 2.4% at one point on the Nasdaq, and it ended up recovering back to only 1.1% down. That's a lot better than where it was. Which sectors were driving that? Well, it was energy, it was metals, it was gold, and of course agriculture. All of these areas that do tend to do well actually in these periods of time, in periods of high inflation. They were the ones that were being chased. And if you look at a year to date so far, you might think, well, the market's down. You might also think, okay, I know that the market is up if I was in energy or maybe even metals, but also gold has done incredibly well. Agriculture has held its own. And you'll notice here utilities has basically remained flat. So really it's the defensive sectors that have started to do very well. And if you look at this chart here, you'll notice that it's a little bit of different investing during times of high inflation. Instead of the normal go and buy semiconductors or go and buy IT consumer discretionary companies, it becomes more of a let's go buy energy, REITs, staples, utilities, precious metals and mining, and possibly even healthcare. Now you might think, well, I've missed some of these. That's because the market's been rotating into these for a while now. We've been covering it on the channel. But there are other sectors and other subsectors that could do very, very well. So remember, there's always an opportunity in markets, whether it's up or down, and you always just need to be looking for it and thinking, does this make sense? That's one of the things we want to be doing. Another thing is I want to mention stock splits. So in general, stock splits have tended to do very, very well for stocks, and especially technology and discretionary ones. Amazon and Google currently both have stock splits on them. So it's something that you might want to think about. Should we see a rally in the markets, that as we get closer in, maybe or possibly Google might also be one of those ones that you want to be watching on the charts. We do have a double bottom on the chart there. This is also why it's outperformed after those announcements. So stocks that have stock splits, look at this, 2.1% versus 7.8% on 3 months, 13.9% on 6 months, and 25.4% on 12 months. You might say this time is different, but geez, they are massive outperformances. So where are we right now in the standard midterm election cycle years? Well, we're about here. And in some ways, we've seen kind of everything play out so far very similarly to these years. Obviously, the percentage is much worse, but it has pulled back through this time. Will the market rally? Some of the bad news is coming out. We have the FOMC coming up. It's going to be an interesting point. So in general, these types of 2018 or any other midterm year has tended to be a rally somewhere in the middle, followed by another dip later on in the year. Is that something we're going to see? We'll continue to watch the charts as much as possible. Do also remember we brought up this chart yesterday. There's a lot of short bets on the market right now, and the market likes to, really cause max pain in some ways. So that is that if everybody's going short and there's a ton of shorts in the market, sometimes the market will hold, pause, maybe even dead cat bounce, all these types of things, and then tend to roll over a little bit after you expect it. Remember, it's expect the unexpected. So let's talk about the market. In general, it is still looking very bad. My bond indicators and bonds in general are telling us to go, we're still going down, or we're seeing weakness here. Until that changes, it's going to be very, very difficult to pick the bottom as in. And we've currently got the US 10-year still rising. However, it has dropped a little bit this week. This is, of course, the inflection point between the 2-year and the 10-year. And when you think about it, the Fed controls the short date and the market controls the long date, that is the 10-year. So if something's going wrong in the markets, that inflection where it goes inverted can really be the canary in the coal mine. It's one of my key lead indicators of the market actually going into a recession, because recessions tend to happen if that holds above the inversion for too long. We do have 20, 30-year bonds currently inverting, but the US 2 to 10 has been one of the best. The VIX volatility index broke through our trend line towards the downside. So the big news came out. It actually dropped the amount of volatility in the market. The market has slowed down a little bit here. And in some ways, this is a good sign for bulls if you are a bull. Now, the VIX is not out of the water until really it gets below 20, but many people have something around this 25 to 27 level to be one of the indicators that they're prepared to take more longs in the market. It's an interesting point, and the VIX currently is dropping. PCC also dropped. That means that there was less puts than calls. There were more calls entered into the market in the last 24 hours. I guess that's a good sign if you're still feeling a bit bearish. Remember, I use this as a contrarian indicator. So if they've been managing to get a lot of calls in, then you see weakness come through, it makes a lot of sense. But yes, the PCC has dropped. It's sitting right in the middle of our usually extreme zone. So not too much information there. Let's talk about gold. So gold did a massive blow off. Basically, it lost a huge portion of its money. It was about 4.63%. We did caution above 2070 around that level as being a big issue, and it's come back down. So let's take a look at a 2-hour here and think about what gold's telling us so far on the charts. Can it go back up and regain its steam? Well, we've got the support to a degree. This 1980, it seems to be supporting the market at this stage. I'm not convinced, because we do still have the US 10-year rate sitting about 1.99% at the moment, and the 2-year rate, if you can believe it, I'll just read out this 2-year rate, 1.7%. We haven't even moved yet, and the 2-year rate is expecting a 1.7%. That's drastic when you think about what the Fed has done so far and what the Fed is supposedly going to do according to the market. So if the rates do go up, gold, yeah, it does tend to be very, very picky around rates. So I think I'd be very careful here. We're not as bullish on it as we were only a few months ago. It did everything we wanted, and now we need to see some other signs for it to go through. So here's a resistance. If you're looking at it for just the intraday, 2008 kind of is a good resistance here. We currently have a buy up. We have a low that's pretty good, and that's not too bad. Some people will say, but Tom, is this a head and shoulders waiting to happen? E.g. left, head, right, neckline. Yeah, I mean, I think the short is also there if it comes through. So just remember, we've become neutral more on this market here with gold. It did a lot of the action you wanted it to do, and I think it's a little bit tough here to trade over the next 24 hours. USOIL, look, we knew this was going to happen. It'd blow off top. Will we get the dead cat bounce? So it's sitting at 105, which in some ways is good for the market. And you might think, well, how are my energy stocks going up? Yeah, energy tends to trade, or any of these stocks tend to trade actually behind the commodity. So if the commodity holds down for a while, you might see the energy stocks tip over a little bit. But in general, yeah, they trade a little bit behind what the commodity is actually doing. So that's why this can be a lead in terms of breakouts here on oil, and then you can go pick up the stock market if that's what you wish to do. So we're sitting about the support again. We've now got what could be potentially, a double bottom. If it moves back up, goes through 115, you might have a nice little trade there. I have said, I think that if this does rally up even round to this level here, it's probably going to sell off. And it does seem like the top is in for oil for now. And I'm thinking that's probably one of the things that most people should be looking at. The oil top does seem to be in. Let's move over to some stocks. Tesla first up. Nice bounce considering, and it's still struggling with the 20 moving average. Look, we've talked about this several times. 20 moving average, 20 moving average. You all know. You know exactly this 20 moving average is a huge deal. And then we have each one of these levels being a massive support resistance for Tesla. So Tesla gets through 860, then it moves towards 890, 900, big resistance there. It gets through 890, we move towards 945, 950, and if it gets through there, positive. So if you're a day trader, there's some of the key levels, and the bounce is a good sign, but it's be even better if it actually goes through that 20 moving average. I think that'll be a big signal here for Tesla bulls that they're feeling a lot better about the market. And remember, the overall would be bam, bam, bam. That is a trough, a peak, a higher trough, and a higher peak. Not too bad if that ends up occurring. If you're a bear on Tesla, you know the level. It's just sitting down here, $800, a close below that. Very bad. So day traders will be out, I think, in force over the next couple of weeks. Trading Tesla, there will be some good levels. Let's talk about Apple. So it fell here 2.72%. It's actually down 0.19 after markets. And I'll tell you what, it's surprising how badly it went today considering the rest. Let's just read out here. Google down 0.88%, Microsoft down 1%, and others just not down anywhere near as much. Apple has held historically very, very well. In fact, it's done incredibly. It was only down 10% considering where the market was. But if it breaks through here, it's not going to be looking good. Remember, we've got a series of lower highs as it's been coming down and testing, lower high, lower high, lower high. In essence, that's what we call a descending triangle. So if it breaks and closes underneath this 155, regardless of the rest of the market, it's not a good signal here for Apple. And it's kind of like a mixture. Apple's like one of those mixture stocks that does have some properties of obviously technology, but it also deals with the consumer. So if we end up having some weakness here in spending, Apple could be one that does get punished for that. So I think this is something that's interesting here. Downward at this stage, 155.81, so 156-ish. A close below this, especially a close below that daily 200 SMA, which the green line, which you've seen that Apple does hold and it respects it quite a lot. That would be a huge deal here on the market. So we'll be watching this one quite closely over the next couple of weeks. We have been covering ARK. I'm not going to mention this much because we always talk about it. We've got the downward trend line here. We've got the 20 moving average similar to Tesla. And guess what? It hasn't even got close to coming back to that. So there's still a lot of opportunity in the markets, even if they run. And at this stage, these really high indebted kind of companies, growth companies, hyper growth companies are just not doing well. Support may be found here around 57, but as we've said, in general, we're looking for that breakout of the 20 before we get interested in them. So let's move over to the indices, and this is where things get really interesting. So if you've been following the last couple of days, we talked about the DAX being way too ratioed with the S&P 500 way too far away, too much fear in the market. It then rallied back up to this previous support, 2020 highs, remember, over here on the left-hand side, and it's become resistance. So we like that area for the day trade. And again, if you can really get out of the mindset of having to always trade the same market, the US markets, this probably was the better short. Well, was the better short. The supports, the resistance area, and then the short off. It's just a nice zone. And I like that very much. And of course, if you've got the high here, you're 4.7%. So it's a lot bigger in terms of the amount of movement. And even if you've got these rejection candles, you end up getting about 3. So these sometimes are the markets that if you have access to them are really worthwhile considering, especially when they're at key levels. The Dow, now this is where the weekly comes in a lot. Imagine if we still get a weekly close like this. We haven't seen the Friday, but if the Friday holds up and it ends up going bullish or something, and then we see follow through, there's got to be some algorithms that will like that price. We've got a rejection week. On the flip side, if you're a bear in this market, if you get a nice bearish close down here or something for the Friday session and it sells off hard, all of a sudden that's going to trigger a very big potential cascade here, especially if it gets under this 32,200 zone and we're moving back down to 30K. That would be, phenomenal in terms of what would happen. Remember, this is like a giant Wyckoff here. We've got those max pains, and we've got our big support that currently is holding. Long leg doji. Will this hold up this week? The Dow is actually one of the big indicators we're using currently in the market. Let's move over to the Nasdaq. So we know we've got that 13,100 support. It's been incredibly strong. It's a good level, and it's certainly of interest. If we breach through the 13.8, where do we go? Well, we think it's the downward trend line, but also we have the support, the resistance, and then of course we've got the trough, the higher trough here, and then we've got this potential breakout. So that would be a lightning bolt leading into this point. And if we breach that, the next stop would be 14.4 and so on and so forth. So will there be a little bit of a gap fill in the next session? That's something that a lot of people will look at. And let's have a look at the futures here. Let's go down to the futures just to have a watch of what actually happened and transpired. So here's the market. There's the previous kind of wicking. You notice here why I've got this green area highlighted so much. And I'll actually highlight that back up here because I like to do it between the wicks. This zone is a big area. We've had huge supports here before. We've had big resistances here. And if you breach through that, you really put that story in that we're going to move potentially to at least the 14.2. Even potentially breaking through this. You know, you've got 200 points between the 13.8, the 14,000, and then the 14.2 or even the 14.4. So the bulls will like that breach. But if we on Friday breach below the 13.4, we've broken through that previous little bit of resistance that we had over here, and we've created a lightning bolt down. So that would be a peak, a trough, a lower peak, and a lower trough. I like that as well. I'm pretty neutral here in the markets at the stage. You don't really know exactly which direction Wall Street wants to take it. That's the problem. So you're just going to kind of think, okay, well, if that happens 13.4, where's the logical take profit? Probably around 13.1. But if it comes back down, considering it's been making lower highs each time it goes in, it might be worth practicing some scaling here, because I have a feeling if it gets back down to this level, again, it's going to break below. That's what I have a feeling of, because that tends to be what does occur. Markets test key supports, and then if they get down to them, they tend to break and go through. So some great bull and bear cases. Remember, both parties do have an opportunity here in the markets. It just really depends on what the price action ends up showing us. Let's move over to the S&P 500. Very similar setup. We have the troughs. We've obviously got that 41.50 zone, I guess, which is held a few times. And then we've breached up, we've moved up, we've found that previous support as resistance, a phenomenal level, by the way. Big level there, huge. 4,300, we've talked about it a lot. Then we've come down and we've rotated back up towards the bull side at this stage. 4,300 break, that's a big deal. That should expose some fairly decent buying. And if it gets back underneath this 4,200 level, then we go down, test 41.50, but I think it could go even lower. Let's actually have a look at the options for the expiration here. We'll just check out the US futures though, the 500 futures, just to really detail this 4,300 level. Support, 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 resistance. That's why we had this as a resistance in the previous videos that we've been doing. If it breaches, you can see how big a deal that's going to be. Where's the next stop? 4,400? Certainly could be. Even in a bear market, these types of things are not unheard of. So a big rally here could be in order. Nice 100 points in that area. So I think that's really good. And similar to the Nasdaq, I also like the short down in. And then I would be saying, well, it's come down a few times. Is it going to break? Maybe a descaling of the position. Let's have a look at the options for Friday. So this is where things get pretty strange. We've got a 420 that's come out of nowhere. So that is a 420 put wall. Basically, the way we look at this is it's going to more than likely want to expire above the 420. Now, the 420 put wall is not there in the next week. We do have a 400. We do have a 380 in the next week worth of expiry, but we don't certainly have a 420. So we kind of have this big bullish movement here that if it gets to a 440, it's unlikely to want to go past that. And we don't want to go below 420. So for the Friday, you would think we try to stay within that range. That would be the idea or the general principle anyway. Let's move over to Bitcoin. And that's only what I would use that for, is just to find the key support resistances and just to understand what the gravity might be for the close. I think that's just, it's one of those things that you add like 5% to maybe a system or 10%. Let's bring in Bitcoin. Bitcoin did not react positively to really anything over the last 24 hours. There's been a lot of leaks and information about US dollar digitalization and all sorts of things. And it has dropped off that 42,000. I think we still remain really, 37K is the huge key. If it holds that, it still feels good. If it doesn't hold that, bad times, 34, possibly even 29, 30. If you get underneath 37, it really is a big deal. This 37 break, especially on a daily close, is huge. And conversely to that, a 45 to 46K break to the upside is huge. So for Bitcoin traders right now, they're just kind of holding it around that little bit of previous resistance becomes support. It looks okay. It doesn't look great. I'm not sure if I am won over by any of the moves. You'll notice when the print came out for the CPI, it went bullish and then immediately sold off, but never rallied below that point. Yeah, I think that this is a hard market to call right now. And sometimes when it's hard, you've just got to practice discipline and just say, you know what? I'm going to wait for these key levels to break. And when they do, I'm going to be on board the gravy train. Thanks so much for watching. If you haven't already, come and follow us over on Twitter at FX Evolution. And just a quick reminder, we won't have live streams for the Monday session next week. And the videos, I'll do my best to get some out, but they might be a little bit different over the weekend because I will be away at a conference. So thank you so much for watching. Please subscribe, smash that like button. We'll see you in the next one.